Okay, there we go. Good morning. Today is April 16th, and the time is 6:23 a.m. And what we're going to do is our usual walkthrough on our outlook on oil. So, oil's been in an uptrend since December. Okay, so we can see that going back to December. And I use the average true range trailing stop. It's a very accurate indicator to assess that and follow the market if it's going up or down. The second indicator I use is a breakout indicator. It's set to 3 periods, so there's a lot of noise in there right now. But if it were set to 20, which it should be, you would see the all right, so I just reset the breakout indicator to 10, so you can see that, basically since January we've been making higher highs, higher high, higher high, higher high. And the ATR trailing stop indicator just confirms that. All right, the other big one I use is the ATR, the average true range indicator, which is currently saying that the market is volatility is around 1.14. So on the low end for oil. On the low end for oil. And that's pretty much what I get out of the daily chart. Direction and momentum, and the volatility gives me some information about the volatility in the market, which is big. That's pretty much what I need going into the lower time frame. So let's go to the 12-hour time frame. We're going to go to 180, and then we're going to do a 12-hour like that. Okay, and you can scroll back and see that the ATR is closer to the market. It's trailing it really great. That's why I love the ATR trailing stop. The moving averages, now the 50 period is above the 200 period, so that's telling you you're in an uptrend. Plus, the daily chart told us that we are making higher highs. That's key. But what I really want from the 12-hour chart is to know where is support located. Right? Where is the support level located? And it's right now at 61.91, 61.95. So I usually just outline that and trace it like so. Okay. And the stochastic can be helpful on this time frame. It's kind of blunt on this time frame, so very late to the entry, but it's useful. So right now the stochastic is showing that the market is oversold, negative 101 with the CCI, and usually it's around this point when we start looking for an entry. So from 12, and you can also see the 50 is above the 200, which is a clear sign that you're in an uptrend. Let's go to the 4-hour. 4 hours a little more fine-tuned. We need to go from like a 50,000 up view down to a 200-foot view, and this is like the 200-foot view. And you can see that this is our 12-hour support level. This is generally the level I like to play because it's the most stable. You have to go out to the higher time frame to find your most stable levels. And this is, this is about where we start thinking about measuring the market. So we know, see, on the CCI, we're oversold. Okay, and you take your trend line tool and you measure, right, to that uh, to that support level. There's lots of support levels. This is just one. And you can see in the box, at the bottom of the box, there's a number that says 1.68. That is the distance between entry and the risk level, the 12-hour support level, 1.16. Remember, and volatility is 1.12. So sometimes you have to risk a little more to get that that dollar move. What do I mean by that? Okay, watch.
It's 6:30.
If you go long right now and put your stop below the support level, you're risking 1.6, right? Volatility, this thing is vibrating about $1 up or down every day. So our assumption is going to be we're near the low, and most likely we're going to move $1. So if you moved $1 from here, $1.12 or so, you would be up at 64.66. Okay, and if you move $1 down, or if you want to get below support, you have to risk at least 1.6. Okay, and that's the let me just write that down. So 1.6 gets us below the support level, and we know that the volatility average true range right now is 1.12. It's not good volatility right now, but you can still make money. So we want $1 move. It's very doable. From here, that will put us around $1.12. Will put us around here, the stop limit. I probably should bring it in a little more. Volatility's not really doing that great. So what am I risking here? I'm risking 1.6 to make 1. So a little less than a 1-to-1. Some people would say that's not a great trade, but what I'm really doing is I'm taking off way more. Say if that does happen, okay, and I make $900. So I'm going to be taking off way more trades like that than when I take a loss, okay, because I'm always basically playing against a higher time frame support level. So I'm in these trades for 1 or 2 days. I take my winners off the table, and that builds up over time. So if this doesn't work out and I lose 1.6, I've made in this trend since December, I've made like 10,000, something like that, around 10,000. So, but at any point in time, I'm only risking $1.2, $1, 1.2. So, even if I take a loss, my return on risk is super high, and that's what makes this a powerful approach, I think. All right, so that's about it. We'll see what happens. We're not getting much movement, but hopefully we will today. All right, take care.